JB here. Hope everyone's doing outstanding. Tuesday, April 15th, tax day. On this fine morning, talk quick about the market. Some names I'm looking to go from there. S&P futures in the green early in the morning, reversed into the red, and now coming back, still slightly in the red here. Uh, Usually you would call it turnaround Tuesday, but markets actually closed higher yesterday. It was in question at the noon hour. Markets gapped higher at the open, reversed gains, tapped red for a little bit at the noon hour, then found a bit and thankfully averted disaster. I wouldn't call it disaster, but if we did have some resumption of sell off, then you start worrying about some of these bounces here. But not much in the way of catalyst yesterday. You had President Trump talk about pausing some tariffs on the autos, right? I mean, it's like every day there's new headlines around the tariffs and what have you. After the close yesterday, had NVIDIA announced a $500 billion investment in the U.S. in regards to AI with partners, Foxconn, things like that, factories in Texas and Arizona. Uh, so I guess that's all. There'll be tit for tat headlines coming through. We'll see how all these things play. Then you have on the flip side, China announcing a halt on Boeing orders, right? And there's only two major plane manufacturers on the planet, Airbus and Boeing. So who knows if this expedites some other competitor to come into space? But planes are not something that you just order and they're made in a couple days, right? But so that continues. You just hope there's more headlines that roll back tariffs, and I think if that continues, and then not only that, investment in the U.S. and things like that, I think that'll maybe alleviate some of the concerns. But I don't know if I was mentioned on the rant yesterday or maybe it was on FinTwit, but if you ask 10 people, even in financial community, what do you think's happening with the economy over the next 12 months? Five of them would say we're going to head to a recession or already in a recession, and the other five are going to say the economy is going to be on a rip roaring tear in the next 12 months, and markets will be at all time highs. So that just kind of shows you how divisive things are. And I mean, who knows? I mean, there's still uncertainty. No one knows how this all is going to play out, especially when all these surprise headlines come out, like we had Friday in the evening. So then now we just have to look at earnings and commentary. So this morning, Johnson & Johnson, Bank of America, Citigroup all reported earnings, all strong earnings. And even Johnson & Johnson mentioned some issues with tariffs because they have med tech devices. They think there's going to be about a $400 million hit to their earnings based on tariffs, but they still raised their guidance. So that was impressive. Same with Bank of America, monster quarter. And you had Moynihan, whoever you pronounce his name, the CEO, come on just saying that the economy is going to change, but still says the consumer seems resilient. So uh, as earnings progress next week and a week after, I'm sure that the commentary is going to be more important because we get the soft data, right, which is the consumer sentiment, which has been weak, and some of this other survey data. But and to me, it's the companies are more important because they see what's going on. They're going to be able to give some color into what's going on in the current quarter, right? Because their earnings are only for Q1, which really doesn't have much tariff impact. So now it's about what does quarter two look like and what are they seeing right now. So I think that'll help. Earnings this week. So we still have ASMLs tomorrow, so that'll be interesting. That one's kind of like pushed the chip sector around the last two quarters, and their last two quarters have been miserable. So maybe they can give a little sunlight on the semi sector, because the last two quarters that has not been the case. And then Thursday after close, we get Netflix, and Wall Street Journal came out with a piece after the close yesterday, kind of pumped the stock. It looked like it had an insider at one of their meetings with Netflix saying that they want to be the next $1 trillion company, grow revenues, uh, things like that. And pretty much they said that they think Netflix is resilient to a recession, even more so that even if there is a recession, they actually might actually help results. So they talked about their ad business driving possibly 2.1 billion or so in incremental revenue, which is surprising, not surprising, but considering Netflix had pretty much nixed doing an ad model way back, finally embraced it, and now it might be a huge revenue margin driver for them. Anyway, so that's kind of the overall market. So I nice to see market trade in the tight trading range yesterday, 1.9% on the S&P, a far cry from last week's 4, 5, 6, 7, 8% intraday trading ranges. Uh, I would love to see a market melt higher, but to me, another kind of like inside day consolidation, maybe that'll bode well for more highs. Also, I hate days like yesterday. I mean, of course, I love to see a gap up, but sometimes these gaps they become fade events, and it's just not. It's a lot harder to play calls because, for example, some of the names I was looking at in the chip, Dell, or I was looking at Universal Displays too. Those hit highs right at the morning, and then you would have to time the bounce, and even that the calls premiums had eroded because implied volatility. The VIX dropped under 30. So it becomes a tough environment. So today might be a little better day, hitting the lows. Maybe if we open red and find some bids at the open, today might be a better day for some spec calls. Also, a lot of headlines. I was talking about Iran yesterday afternoon, the death cross, right? Oh my gosh. I mean, we've had such a big move to the downside. It seems like all the charts would have pretty much death crosses set it up. So, nice little chart here. I think this is from Market Watch or one of those places showing performances. So, not much in the way of concrete evidence of more downside, right? If you're looking at a death cross to kind of like confirm a trend, I mean, the trend says that 55% of the time the stock is up after, well, the S&P is up after the death cross within a week. And then as you go down the line, 80% of the time over 1 year. So certainly doesn't mean 100% guarantee that there's more downside, but obviously you don't want to see death cross on the chart. That's momentum and the trend, right? The trend is your friend. Anyway, so that's that. Then some other names, things to note, right? Yields came down yesterday, so it's funny. We'll just probably move to the next headline. Last week it was the panic around yields in the U.S. dollar. Hopefully that will start to head to the to put back under, sweep that under the rug and come out with the next possible market catalyst. And then the VIX back under 30. So all good things here, constructive. I still, still uncertainty. Can't just sit here and put my bullhorns on and think we're going to rally to all-time highs. I also, on the flip side, I think unless there's no deals being done in the next couple of weeks, I don't think the market's going to hit new lows, pending any crazy shenanigans. So maybe it's kind of like a choppy environment for now. Be nimble, weekly strikes, open to both sides like I've been for the last couple of weeks. And go from there. So that's overall market. So first GameStop, which actually hit lows in the afternoon, reversed into the green, closed up 2% again. Just strong. Unfortunately, the premiums didn't creep into the calls like it did last week. Still looking for June or July strikes. Funny enough, I posted this early in the chat room. It had a death cross a couple sessions ago, and the stock is up over 10% since the death cross. And then, ironically enough, it might have a golden cross. That's when the 50-day crosses over the 200-day moving average. So it might be one of the shorter death cross to golden cross reversals that I've seen. So good sign there. My rant there. I'm not going to go on a rant here on GameStop, but I think eventually it starts gaining some more steam, especially once it breaks $30. First Solar rallied yesterday. It was gapping. It was like 128 in the morning, then 129, and over into 130s. Hit highs into the afternoon. I think this continues to trade higher. I locked some of my calls in for 100%. I was actually looking to possibly close some more out. They were up over 200%. But I figured what I want to do is I want to add some later strikes, probably next week. So we'll see what happens here today. If I could get more out for a couple 100%, and then I'll look to get maybe the 145s for next week. Those were $1. They're actually a little more than $1. I might look to get those, or maybe 147, 148s, because I think this trend in First Solar continues. You also have a lot of analysts adjusting their price target, but their price targets are still in the 200s. You had Bard this morning maintain outperform rating. I think they dropped the price target from 270 to 240. The stock's at 130. Traditionally, First Solar has had these high price targets because if you look at its business, it's impressive. It just never seems to get going. Some of it's regulatory stuff, some of it's administration stuff with, the current administration, you would think, does not really align with solar, right? But what it does align with is domestic manufacturing, which First Solar has. And so anyway, all right, rants, another day on First Solar, like that one. Other names that, I talked about Dell, unfortunately it gapped at the open, reversed down to lows, then bounced. I missed the bounce. Still watching this one. If it finds some footing here, may look to get some calls for play over $90. Wayfair was in the green yesterday. It's actually gapping a little bit lower here in the pre-market, but still looking for some more strikes on that one. If there's a deal with Vietnam and the U.S., I think that trades over $30 in a flash. The unfortunate thing is now you have China and Vietnam coming out with headlines around partnerships. So I don't know. I don't think that's net negative, but we'll see how that goes. Then, still watching DEC here. Unfortunately, DEC and Restoration Hardware, rough sessions yesterday. Still like DEC here for a bounce at some point, so I'll continue to watch that. Still have some 125s, freebies. And then I was talking about GPCR and some of these names that had moved higher yesterday after Pfizer nixed their GLP-1 drugs, so they stopped their study, which is, you would think, two things. One, that reduces a competitor, so a competitor for VKTX, GPCR, and some of these other GLP-1 names. And then number two, it brings Pfizer back into the M&A arena, right? So if it does, all it does is increase the odds of some M&A in that space. I was actually looking at VKTX in the morning. I think it was up near 27, 26. that closed at 24.57, so it gave back a lot of those gains. And now, GPCR, which was, which obviously traded substantially higher last year, was one of my top 5 stocks. That was I think it was all the way up near 60. That has come pretty much cut in half since February and started to bounce. And then yesterday it was hitting highs until the end of the day. So that could be one I get some spec calls on. The only issue is it's monthly strikes, tough to find liquidity. So we'll see how that one trades out. I think that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.